I was there for Game 7 of the Sumo World Series, if you will, but it's 15.
Game 7.
Yeah, like the equivalent. Like it was the 15th day of the tournament, which is like.
Is it exciting?
Dude, it's crazy, bro. It's crazy. It's probably the wildest sporting event I've ever seen in my life. It's like
Sumo.
Sumo.
Wait, go on. Why?
Well, first of all, the audience there is of every sex, age, demographic. You got young kids, older women, like everything in the world. Like, so it's complete, as opposed to like a football game for us. It's going to be a bunch of drunk dudes and like some women every now and then, and maybe a kid or two. But like, right? It wasn't like that there. And every match gets better. So it's like maybe 50 matches throughout the day. So like in the morning, it's like the younger kids, like the up and comers. And then with every match in the afternoon until finally the main event.
Yeah, it's like an undercard leading into.
But all day.
Yeah.
Did B Honda win?
Day. What?
Remember B Honda from Street Fighter?
Yes. Yeah. Well, it's funny because when you look at the different, they're all Japanese except for a few guys. There's like a couple of Mexicans and like some Romanian guys. And you could just tell by how much hair they have on their back because the Japanese guys don't have any hair at all. But then like these Russians come in there and they're just giant bears full of hair. Yeah. Like it's just pretty funny because they stand out and it's crazy. If you can ever get a chance to see sumo in Tokyo.
Where does the audience sit in relation to what they're on like a raised, they're like on a raised mat?
They're like squares, and you sit down on the squares, and then like each square is for 4 people.
Okay.
And it's way too small for like Americans. Like smaller Japanese people, it's probably more convenient.
Yeah.
For you and me, bro, it's just not like it's not gonna cut it.
I wonder why they haven't brought sumo to like MSG, like fly over the best.
Do. I feel like they
maybe we don't know about it.
Maybe we don't know about it. They probably.
But is that more fun than like watching different martial artists, like watching like UFC?
Yo, it's crazy. So the referees, with every match, the match is more important. The referees' get-ups get crazier. So by the time you should see these.
Wait, what do you mean? What do you mean?
These guys have all these ridiculous get-ups, all different colors, like they look like Cinderella.
The refs are in costume.
Oh shit! Look at this,
dude. They're out of control. So with every event, the refs.
Look at this guy.
Dude, you should see these things. So the Yokozuna fight at the end is best 2 out of 3. It's the only one that's best 2 out of 3. And you should see this guy.
They're called Gyojis.
Wait, what's Yokozuna? Is that the name of the athlete?
That's the name of the grand champion of the event.
Okay. So that's how you want to become that, you're saying?
They date like all the models and all like the actresses. Like they're the ones who crush it in Japan.
Okay.
They're like the Tom Brady of Japan.
How big are they?
Look at these guys.
360, 370.
You guys sound like a bunch of gaijin.
Get out of here. Go back to North Carolina. Sit down. Let's hit start before I lose interest in this whole thing. We don't have John today, JC. Nicole is filling in. This is like the biggest test of your, right? Are you ready?
Early career.
Are you nervous?
I asked her if I had enough charts.
I heard you showed up with 400 charts.
I deleted some.
All right, let me get into my doc. All right, guys, what are we doing? We good?
We're close.
Okay.
60 seconds.
All right, Michael's Googling sumo wrestlers. He's gonna fall into a rabbit hole.
Dude, I'm telling you, man. You guys, and then I saw this other guy with like a Pittsburgh Steelers hat on, and I forget what I was wearing, but I think it was a Miami Dolphins shirt. And we both walked by each other. We were the only non-Japanese people there. And he walks by me. He's like, yo, this shit is crazy, huh? And I'm like, yeah. We just kept walking. Like we knew like we were both like in a different planet. It was pretty funny, actually.
I love it.
All right, here we go. Coming in with 3 claps.
Wait, I'm nervous.
Why?
No, I'm just kidding. Go.
What episode is this, Nicole?
Michael, this is The Compound Friends, episode 103.
She's better than John at that. She's good.
This episode of The Compound and Friends is sponsored by JP Morgan Asset Management. Whether you're looking to build a complete diversified portfolio or target specific regions, factors, and strategies, you can choose from more than 50 innovative low-cost ETFs. To learn more, go to jpmorganetfs.com.
All right. I mean, this is like a homecoming fan favorite. JC Parets is here. JC joins us for the second time this year, but we've just established that your first appearance this year was the first show.
That's right.
Was January, and obviously a lot about what the market was doing since then is different than today. Let me play something real quick that I think is apropos for what the show is going to be about. Bear with me.
You gotta somehow get yourself out of that pickle and say I was wrong. But his with the mea culpa, his year-end target's 4,200.
Talking about Mike Wilson.
It's just more of the same, right?
Yes, that's right. You can tell people are still bearish because the strategist year-end target on average is 8% downside. And the strategists reflect the buy-side sentiment. So most professional investors think the market's going to go down between now and year-end. I thought, yeah. So then
If you've been wrong, more.
All right, that is, of course, the illustrious Tom Lee. Tom's having a much more fun this year than last year, would you say?
I don't get it. I don't read his research.
Yeah.
So I don't know.
Okay. Listen, man, this is a very different tape than what we started the year with, but let me back up and do an official introduction. JC is a compound fan favorite and founder, chief strategist for All Star Charts. He is a technical analyst.
Wizard.
And All Star Charts is a technical analysis research platform. It's used by hedge funds, RIAs, family offices,
central banks,
sumo wrestlers, individual investors. JC Parets, welcome back to the show. Great to have you.
Thank you for having me. Appreciate it. Thank you. Thank you.
All right. I'm being told to lower the volume on
What's
my
that?
thing. It's Liquid Death.
They come in flavors now?
Yeah. It's
very good.
Severed lime.
Is it carbonated?
Yeah, it's carbonated.
I had my first liquid death at Lindson's house in Coronado like 5 years ago, believe it or not.
Oh, really? I heard they just sold this company for like a gigantic amount of money.
Yeah.
Very
Water, big business water.
Did Howard invest?
Yeah.
It's not just that it's water. A cursory internet search told me that it looks like a beer.
Yeah.
And a lot of people are not drinking alcohol anymore, or not as much as we used to.
Oh my God, this guy stopped drinking for 10 days.
No, not me.
He stopped for
He has
10
one
days and he's
conversation
like,
with Perlman.
unbelievable.
This
Not
guy.
me. A lot of people are
I won't
more
send him
into-
wine. I'll send you wine.
Thank you.
A lot of people are, there's a backlash. Everyone started drinking way too much during the pandemic, and now people are drinking less. That's all I'm saying. That's all I'm saying. So if you walk around a party with one of these, it doesn't look like a Poland Spring bottle.
Sure.
Can we all agree on this?
That's
Yeah.
a fact.
Okay. That's all I'm saying.
Okay.
All right.
All right.
JC, have you brought any charts for us today?
If you had to guess.
All right. Nicole, are you ready for this?
Look at this guy, but he's out here naked. Actually, JC, you know, the shirt I almost wore today, for those who are just in listen-only mode on
look at
this podcast, I'm wearing Fibonacci's my homeboy. At first, I had to sell puts naked, but I think that was a little bit too risque. So I went.
It is a bull market.
I know. I went Fibonacci.
Dude, what's going on? Are we going to, is this just going to continue through the end of the year?
Did you hear what I said? Today is a key reversal day, short term.
Key reversal day?
Yeah.
You sure?
No, I'm not sure. No, I'm not sure. I don't know what tomorrow happens.
So the Dow just went up 13 days in a row or something?
Yeah.
So we're down one day.
Yeah.
Okay.
but it's
See,
outside.
this is the big one.
It's an outside day.
Don't put charts in my mouth. I'm not saying that.
All right. Let's get into what you think is going on. The people demand to hear from you.
Well, no, listen, and I appreciate the invite and all the kind words, of course. And just keep in mind, you know, we could do this all night, as you guys are well aware. We could be here for hours and hours and hours.
Lionel Messi said it best.
Order food, you know, order some cocktails, and we could do this all night. So obviously, we're not going to do that. We're going to try to just kind of bring up. Is that good? Is that
it's good.
Yeah, you're happy about that? Right. In the old days, we used to drink tequila. We used to drink tequila when we did this. Now we got me drinking seltzer.
Josh
It's a
is
full
growing up.
market.
We're evolving. Come on. Let's go. No,
Breath deterioration.
Okay.
So we're seeing new 52-week highs in both the Dow Jones Industrial Average and Dow Jones Transports. And, you know, I know a lot of this might be common sense, but I think a lot of investors fail to realize that when you look back at all of the bear markets in history, you don't get a lot of new 52-week highs in those bear markets, right? Like just strong downtrends, you're just not going to see a lot of new highs. So this is just further evidence of all of the other things that we've been seeing for over a year. You know,
this is Dow theory confirmation. I mean, you don't like the word confirmation, but
yeah, I mean, it's not a divergence. I mean, it's just it's a reiteration, it's a confirmation. It's just hey guys, we're making new 52-week highs. So all that other stuff that we're seeing that says the same thing, like this isn't saying anything differently.
I looked at the components of the Dow Jones Transportation Average earlier this week. It's like everything that you want to see going up. If the prevailing narrative is now going to be that actually the economy is reaccelerating now that inflation has cooled off, it's UPS.
Wait, you guys
FedEx.
having deja vu? We did that last time we spoke about
No,
the
I know,
transports.
but it's trains.
Yeah.
It's
automobiles. Is Uber in there? I know we had this conversation last time. I can't remember.
But everything that you want to see going up is going up. Airlines.
If it closes right here, it's the highest monthly close of all time.
Is that
For
bullish?
the transports?
Going all the way back to Charlie.
Yeah, right. I was going to say, that
Charles Henry
sounds
now.
super bearish. Okay.
Does that a new all-time high? Is that traditionally
No, not
bearish?
at all. Not at all. Okay. All right. So this is good to have, even if you don't believe in Dow theory or you think it's outdated or whatever. If it's not a negative thing that this is going
Now,
on.
also, let's remember when you talk about Dow theory, this is probably one of the least relevant Dow theory tenets. Remember, closing prices are the most important price. That's Dow theory. Asset prices trend. That's Dow theory. I mean, there's a lot more than just, you have bull markets, you have bear markets. All of that is Dow theory.
Right.
So this is just one of those where you have the companies that make the goods and then you have the companies that deliver those goods. And then if you want to argue that we don't deliver our goods through railroads or automobiles or airlines anymore, and we deliver them through computers and semiconductors, well, they're making new highs also.
That's right. It's not as though the SMH is at a 52-week low.
Right.
Okay. Got it. All right. What are we doing next?
So this is what you were talking about, and it's less about, well, the last time that the Dow went up 13 days in a row and it was a full moon on a Wednesday, on a pre-election year.
Stop making fun of Ryan Dietrich right this minute. He is a friend of the show. I'll not have it. Go ahead. Keep going.
My point is it's less about data mining and more about when you see just a relentless bid, whether it's a rate of change, an expansion in new highs, just relentless buying.
Yeah.
That tends to not happen near the end of cycles, but near the early stages. So it's less about whether it was 11 or 12 or 13 or 14 or 10, and more about the fact that we're seeing these thrusts of relentless bids that tends to happen closer to the beginning than the end.
I know I'm preaching to the choir here, but can you explain to the audience or just affirm that an overwhelming amount of demand for stocks is not a bad thing, even though some people tend to think that precedes a crash?
Yeah, I mean, there's a few things here. So we know mathematically, it's not like a guess. It's not like there's a random walk or like the efficient market hypothesis. Like all of that has been proven that none of that is right. Those were just theories. They were proven wrong. We know for a fact that asset prices trend.
Yes.
We know.
Yes.
There's common sense. Like you could just see it in the charts. They go up for a while, they go down for a while. But you could also do the math and you'll also see that, yes, asset prices trend. It's volatility that mean reverts, right? The problem with most investors is that they are betting that asset prices are always mean reverting. And the technical analysis books do a great job of reiterating the mean reverting strategies and less the trend following strategies, which is one of the many reasons why investors are always looking for mean reversions when they should be betting on asset prices trending. And then on the volatility side, they do the opposite. They think high volatility is going to lead to higher volatility.
Why do we do that?
Oh, that's such a great point. We do that because of the gambler's fallacy.
Yeah, it's backwards.
We do that.
It's a lot of reasons.
We do that for the same. This is what built Las Vegas. People think the roulette wheel just was red 8 times. It's got to be black either this time or the next. It's not going to be 10 times without black. And of course, every time you spin the wheel, the probability is 50-50. What happened before is not. Okay, that was the key insight that Bugsy Siegel and Meyer Lansky had, like literally to set up these table games.
Yep.
And pick one. They're all everything's based on this gambler's fallacy of what goes up must come down, what was red must be black, even must be odd. So we know the stock market doesn't work that way. But that point about volatility is the thing that mean reverts, meaning you get a year like 2019. I don't know if you remember this.
I do.
People were complaining that there wasn't enough volatility for Wall Street to make money.
2017 also.
2017, maybe it was in 2017. That was like the worst complaint on Wall Street that year. Where's the volatility?
The meme was how many straight days without a 1% move, remember?
Yeah. All right, so all those dickheads got the volatility they wanted in 2018. Here you go. Plenty.
Yeah.
Two crashes inside of 1 year.
Well, I think the answer is that there's a time and a place for everything. There's a time to employ strategies that are good for low volatility environments, and there's times to employ strategies that are good for high volatility environments. We're not in a high volatility environment, so your high volatility strategies are going to suck. You want to sell puts, you're not going to get paid to sell puts, man.
One other thing on the relentless bid, you don't have to track how many days the Dow is up. Just eye test your own stocks. Does it feel like a bear market? Like, just look at your own portfolio at Robinhood or E-Trade or Goldman Sachs or wherever your stocks are, and you don't need the stats. You know.
Well, I don't think it's that simple. Different people own different things, Josh. So if you're in a diversified portfolio and S&Ps have done what they've done, you're doing well. But if you're like loaded up in meme stocks or you're loaded up
I think we could agree most investors own Apple. most investors.
I guess. Are we going to do this again?
No, all right, enough.
You know.
Here's what, JC. When I was on with you and Strauss, we were talking about how it's like, I'm using air quotes, only the big stocks going up. But what happens is that in bull markets, the rest of the market tends to catch up. And that's exactly what we saw over the last couple of weeks.
When we were last year, it was the big stocks that were not going up. They were the only ones.
No, I'm saying when I was on with you and Strauss,
Right.
a couple weeks ago.
Oh, recently.
Yeah.
Yes.
By the way, plug that show. What's it called?
So we have the morning show. We do the morning show every day from 8:30 to 10 on Stock Market TV, and it's a lot of fun. You know, we're doing this stuff anyway. We're at our desk watching the open, you know, talking about what's moving, everything like that. So we just do it live. Why was so recorded? Yeah.
JC, how important is, so I know we're going to get to all your charts, and I don't want to be too short-termist here, but I'm looking at the RSP, which is the equal weight, or the S&P. So RSP right now is engulfing the 4 previous days, meaning the high was higher than all of the previous 4 days, and depending on where the close is, which is 30 minutes away, so
That
we'll
is
say,
one big red candle.
the red is lower than the lowest level of the previous
Yo, that looks like a stick of dynamite.
of the previous 4 days.
Yeah.
So is this the type of thing that you're looking at? You're like, yeah, I'll wait. Listen, we're in a bull market clearly. I'm not going to let one outside day say that it's over. The top is in. I'm asking you.
I think the top could be in for some stocks. I would bet that it is for the year, actually.
Oh, really?
Yeah, for sure. I think a lot of stocks probably have peaked for the year, and a lot of stocks are nowhere near the peak. I think the back half of the year is going to be, I think, very bifurcated, where you can have a series of outcomes. One of which is you get such strong rotation into things like energy, materials, industrials, things that have much lower representation in the major indexes, while the larger ones that actually have done so well in the first half of the year
might go
sideways, maybe down a little, maybe a few of them go up.
It's enough.
Well, whether it's good or not, it depends on what you own. But my point is, we could see a situation where there are huge winners at the individual stock and sector level, for that matter, and the indexes have a hard time going higher. Maybe they're a little higher, maybe they're a little lower, or you get that rotation and the relative strength comes from all those areas, but the big ones don't get hit and they kind of just grind higher slowly, dragging the indexes up too. I think the former is probably more of a sideways grind, maybe down a little bit, but the huge winners underneath the surface, I think is what I'm betting on.
I think it's gotten too easy and too automatic to buy the big 7, and anytime that I can remember where it's just become so obvious what to do.
Yeah.
It might not be the top forever, but it's usually a short-term top. And I don't know how to quantify that, because I probably could have said the same thing 3 weeks ago and they kept going
JC,
up.
wouldn't you say that this year is a complete reversal in terms of mega cap or different caps? In 2022, RSP kicked the shit out of SPY.
That's right.
And
Why don't we show that chart,
And all right, you know what? It's enough of me. Let's get to your chart.
Yeah. Why don't we get to that chart?
Let's go next.
Skim down a few charts. One more.
This is the one. Okay. Yeah.
So I think this is a good one because what it shows is the equally weighted S&P 500 relative to the market cap weighted in black. And then overlaid on that in blue is the value versus growth. So exactly what you were just saying, Batnick, this year, all year, both of these lines, black and blue, have been declining, which means that growth has been outperforming. That says that blue line is going down.
It's crazy how well they line up with each other.
Because what's in the market cap weighted S&P 500?
It's all growth.
So when people are like, well, JC, the equally weighted S&P is not keeping up with the cap weighted. It's not because of bad breadth. It's because of sector rotation. It's not a breadth story.
Right.
It's a rotation
It's a growth
story.
versus value story.
That's it.
Yeah.
So last year, everything was working except for mega cap growth. Literally, everything was working.
Yeah.
And then this year, mega cap growth took over that leadership. And it was just a coincidence. It was kind of the first week of the year, which is why a lot of year-to-date charts are so obnoxious. It's because that's when the rotation happened.
Dude, RSP, SPY, peaked or bottom, depending on which is on the numerator denominator, on January 11th. So it's been one way all year.
And you can see it. And then when you look at, well, JC, the Dow's not keeping up with the NASDAQ. The S&P is not keeping up with the NASDAQ. It's the same story.
He's doing you. That's his impression of you. No, I know it is. All right, keep going.
It's a general U. Yeah. It's not necessarily
the U's.
Yeah. No, hold on. Go back real quick. So you see how the Dow, NASDAQ, and S&P NASDAQ ratios look exactly like the ones above? It's a sector rotation thing. It has nothing to do with market breadth.
Yeah.
Doesn't this look like, though, that it's about to
go up,
bounce off of an extreme?
Yes.
Both of these.
Agreed.
Okay. Is that going to be important later?
I think it's already important.
Okay.
Well, and also interest rates, right? Like you
Well,
would
that's the big question. We'll
you
get
would
there.
I mean, interest rates are ripping right now, so you would think that's indicative of support for these two charts.
I agree. Look at you, Mr. Intermarket guy. All right. I see you, dog. Someone's listening.
I'm paying attention. Let's go, JC.
Let's go. We'll go drink later. All right, so these are the sector returns since the bull market started in June of last year. So we are now in month 14 of this bull market, led by consumer discretionaries on an equally weighted basis, up almost 38% in this bull market.
That's crazy.
Industrials equally weighted, up 35, and then technology number 3 at 33%. And when you look back at bull markets throughout history, there's been plenty. You know what you're going to find early in those cycles? Early on in bull markets, the leaders are industrials, technology, and consumer.
Probably because that's where the upward earnings revisions are happening the fastest.
That's definitely why.
Yeah. No, I'm just
I
saying. Well, why would that be the case consistently over multiple cycles? There's got to be an explanation that makes sense. I know you don't get paid for the explanation.
Listen, that sounds good. That's why, because the earnings revisions.
Yeah. So every sector in the S&P on an equal weighted basis is positive on the year.
What spot is that? Real estate on the bottom?
Yeah.
Okay.
Yeah.
Even real estate.
And financials.
Yeah.
And then, so this is equally weighted. Go to the capital weighted just to show the other way. So in this case now, technology is up 45%, but half that's Microsoft and Apple. Industrials actually still at number 2. And industrials on a cap weighted basis, their sector index, no component is more than 4% of the sector. So it's a very diversified group, up 30% in this bull market. Then communications, discretionary, even financials up 18%. So this has just really been a very, when you think about what's a bull market, what's a bear market, like if you think that we've been in a bear market over the last year, you need to have your head examined.
Look how perfectly this works out too. If the story for why the market is doing what it's doing is economic reacceleration, look at the stocks that are trailing: REITs, utilities,
staples,
Yeah, it's a bull
and
market.
healthcare.
It's bull market behavior,
It's
baby.
this is literally what a textbook bull market looks like.
In a pre-election year, like just when it's supposed to go up,
It's
in the
all
third
happening.
year of a bull market, like just
By the way,
everything.
don't you besmirch Dietrich. He did great work.
Dietrich's my boy.
I know he did great work on the presidential cycle, the midterm cycle shit.
You know who else? You know who did
bullish.
it on our show?
Yeah.
Terra Nova did it on our show.
Yeah.
Last time he was here, he walked us through. Is widely accepted, but like why you want to focus on the presidential cycle, and maybe it's lucky again, but all of that stuff came true. Perfectly.
Not to get too sidetracked, but are
The
you
most bullish time is after the midterm years, and literally the fourth quarter last year, S&Ps are up 7.5%. First quarter up another 7%. Second quarter up 8.5%. Up another 3% this quarter. In bear markets, stocks don't go up every quarter.
Yeah. No, it was actually a flawless thing to be focused on, is getting through the midterms, and might have mattered more than the rate cycle, quite frankly.
It was simultaneous, I think.
Okay.
Yeah.
All right. What else we
keep
got?
going.
All right. So this is when the market bottomed. People are like, well, JC, the S&P 500 bottomed in October. It's like, yeah, but by the time the S&P made its bottom in October,
Look at this.
there weren't any stocks left still going down. Everything had already bottomed, right? Everything bottomed in Q2 of the year, right?
Yeah, look at this. You really had the worst of the selling last April.
Yeah.
Okay. That makes sense to me. That lines up with my own memory of it.
You had one more low in June, and then things started getting better from there. And then by the time October kind of retested those lows, there weren't any stocks left making new lows.
Right. So the index itself bottomed, but most stocks had bottomed months prior.
Yeah, the index was being dragged by the big caps that were still dragging.
Right.
That's a great chart.
That's a great chart.
Yeah, so I just want to remind everybody why we're using that June 16th anchor point. Like we're not just randomly, like there's a reason why we're anchoring to that. All right, keep going.
Just math, that's all.
It's just math, no big deal. And then the catalyst, this was the catalyst all along. So it's not the Trump or the Powell or the earnings
The Trump.
or, the sequestration and the taper. Like it's always something.
Wait,
it was
what
the
was
dollar.
sequestration again? I forgot.
The sequester, bro.
What is that?
I don't know. It's like the taper, but something else.
I mean,
don't
I'm
know.
sure I sold on
The
it,
debt
but I just
ceiling is another one.
I
They
honestly
keep
forget.
recycling
I remember the
debt
term.
ceiling.
Was that something with Congress? Was that?
I don't know.
I don't know. I definitely sold everything, but just in case.
It's like one of those scary words where it's like, oh, that sounds like a reason to sell.
Sequestration.
Yeah, I don't want to
sell my Microsoft.
Yeah. I don't need to get sequestered this Thursday. I'm going to cash.
Sounds too much like castration. Sell everything.
Yeah, right.
All right, fine. So what?
This is a real thing, I swear.
Sequestration refers to automatic spending cuts that occur through the withdrawal of funding for certain, but not all government programs.
I'm sure I talked about it on TV. It doesn't matter.
Yeah.
All right. So, but what matters? This dollar reversal was a big deal. It turns out, in hindsight.
Look at all that huge uptrend in the United States dollar.
Wait. So the dollar and stocks have been negatively correlated.
Very strongly
like
so.
Very strongly.
Well, the dollar
correlated.
killed stocks in 2022.
Or what stocks were coming off was money going into the dollar as a safe haven.
Okay.
I don't know.
Yeah.
Chicken or the egg, who gives a shit, right? That's how I look at it. So anyway, so at the end of September, the euro bottoms on September the 26th. The pound bottomed on September the 26th. The euro bottomed 2 days later on the 28th. And the dollar just came tumbling down, and now we're breaking down. So what's the catalyst to take stocks higher? I think it's the US dollar rolling over here. It's not the US dollar rolling over that the market wants. I think it's a need. I think if we're going to have a strong back half to the year, it has to come with a weaker dollar, especially if those leaders are going to be the more value-oriented area, maybe more commodity-based stocks that a weaker dollar, maybe emerging markets. Like for us to get that, I think you need a weaker dollar. If you have a strong dollar in the back half of the year, I think stocks are going to be a mess.
But isn't this all the same thing? We're saying the same thing because the dollar would be strong if interest rates are rising because money is going into a safe haven.
Don't worry about interest rates. Two different things.
Well, no, they're correlated.
A few of the companies that reported.
They are when they want to be.
Okay.
A few of the companies that reported this week, I think including Meta, mentioned Forex as a positive, as a tailwind versus a headwind, which it was last year.
It's just that the dollar's the only safe haven.
Right.
So that's where the bond market is no longer that. The bond market is not a safe haven.
But when
it was worse than stocks.
When companies like beat their earnings by 16 cents, like large multinational companies that are doing like half their revenue overseas, and then they still, like last year, there were a lot of misses because or guide downs or whatever, and one of the more frequently cited things besides inflation and labor costs was currency, and then that reverses itself, and it almost acts as a double benefit. The stock's going up because the dollar's going down, and then the company comes out and beats their numbers because they got that tailwind from the exchange rate. So it's actually it's like a double bonus.
So what if it's not? What if it's like this though? What if this is just a failed breakdown and now we squeeze?
Well, dollar's ripping today.
In this environment, if the dollar index is above 101.5, I think that puts pressure on stocks. I think the stocks in general are probably going to have a tough time if the dollar index is above that 101.5 because it puts it back above support.
101.80.
Yeah. All right. Now let's see it stick.
Yeah.
Let's see it stick the landing. Yeah. And if it does, stocks are probably not doing well.
But if you don't think interest rate differentials between the U.S. and Euro, for example, are responsible for the dollar having a false breakdown or whatever, then what do you think? Then what is it? Demand for safe haven assets?
Yes.
Isn't the euro a safe haven asset also? Isn't the yen?
No. Quite
the yen is
the yen used to be, not anymore.
Not anymore.
Yeah,
Think about what happened last year. The yen was making new 20-year lows. The stocks are getting hammered.
Fine. Okay.
No,
all right.
What I'm saying.
So demand for something safe still fuels the dollar more so than
there's
an
been
interest rate differential.
The only other thing that I've noticed, that, like in terms of safe havens, like obviously you see it in credit spreads, but consumer staples and low volatility stocks on a relative basis have also served that. So you'll see low volatility and consumer staples outperform when stocks are under pressure in the same way that you'll see the dollar doing well when stocks are under pressure. And then you'll see Treasury bonds outperforming junk bonds in that environment too. Like that's what is still a safe haven. It wasn't the yen. It wasn't bonds on an absolute basis. So you can't trust
classic risk.
We have a Staples. Do we have a Staples discretionary chart coming up later?
We don't, but discretionaries have been doing their thing. But if you start to see staples outperforming discretionaries, which maybe you started to see that this week, but if you start to see that, that's very similar to me.
Yeah. Certainly, but
that should come with dollar strength.
Yeah.
And stocks in general under pressure. If you want to go to the next chart, just to kind of put things in perspective, this was the high. Remember those magazine covers?
Yeah.
Can't stop, won't stop on the dollar.
Yeah.
Barron's with the muscle man, George Washington.
We were laughing at that in real time. We were laughing at that in real time.
Yeah.
Not always, but sometimes it's pretty clear.
Go to the next chart just so you can see the last time that it did this. The Economist did the same thing, and look how well stocks did 2017. We were just talking about that. One of the least volatile years ever.
It's safe to say anytime a magazine has George Washington's shirt off and his pecs out, like it's probably not going to last much longer.
It's the old GW Reuter indicator. I believe Ben Graham used to write about that. No. Okay.
What?
And remember, FTX literally created a way to buy the dollar through DeFi a week after the dollar had already peaked.
Yeah. When FTX jumped in, that might have been a nice indicator.
That was literally the top. So just kind of remind everybody, put things in perspective. So look at Latin America making new 52-week highs, Brazil new year-to-date highs. So you're seeing rotation into those emerging markets.
EWZ is MSCI Brazil. There's like a lot of banks and commodities in this thing still.
Dude, the U.S. is 4% energy in the S&P 500, and Brazil EWZ is 17%.
Yeah.
Materials is like 20-something percent.
Telecom is big in here.
And financials, big weighting in financials too.
Right. Okay.
Yeah, no tech, zero tech. Chinese internet also.
Shout out to K-Web.
Shout out to K-Web. So this is the IPO low. So this goes back 10 years for you youngsters out there. I remember the IPO not the IPO, whenever they issued
the launch of the fund. Yeah.
The listing. So 26 is that low. So if we're above 26, I think you can own Chinese internet all day. Take a look at the components. Those are interesting. And there's already stuff in emerging markets working. Nicole, if you want to go to India making new all-time highs.
Can we talk about this?
Yeah.
All right, let's pause on this. Michael and I talked about this the other day. This is the Nifty 50, which is the 50 biggest stocks in India, give or take. Okay. But then if you look at the other India-related ETFs, which we did, there's one that's like focused on consumers. There's like one that is a bigger selection of stocks and not as concentrated, but they all look the same. This is like, I feel like has the potential to become a really big trade.
I mean, has already been for a decade.
Do you know how small these ETFs are?
Yeah.
There's like no money in them.
Yeah.
This is not something that American investors are focused
because
on.
there's something, this is something that Mark Dow out in California talks about a lot, which is the correlation among asset managers. Well, they'll bucket emerging markets together in one bucket, even though India and Brazil couldn't be more different in terms of their composition of their economy.
Because they don't know better. They know that they're developing economies, and it's like close enough.
So you'll get that correlation. But look at India. Look at Bank Nifty. I was told that we were in a banking crisis, and I see the Nifty Bank Index. Nicole, you want to go to the Nifty Bank Index? Making new all-time highs.
Look at this shit.
All
right. So these banks, nobody's ever heard of these in the United States, but these are very big banks.
These banks are not lending to Silicon Valley startups.
Yeah, but they're regional banks in Mumbai. So why don't you go to the next chart? So here's HDFC Bank.
That's a great looking chart.
Yeah, nice.
Wow.
$172 billion
HDB.
regional bank.
Michael's a huge Indian food guy also. I don't know if you know that.
Love Indian food.
He likes the chicken.
Shut up, asshole.
I like the chicken? What's wrong with the chicken?
No.
Shout out to our Indian viewers. We have lots of Indian viewers.
I love Indian food.
I said, what's your favorite Indian dish? And he goes, the chicken. I thought it was really fun.
What's your favorite Indian dessert? Do they love their dessert? The ras malai?
How much time have you spent in India? You've spent
Good amount.
quite a bit.
Yeah,
Okay.
I've been there 3-4 times.
You have a big fan base there too.
It's been fun. Yeah.
I've never had an Indian dessert.
Dude, ras malai is like if cheesecake met tres leches in India.
What do you mean?
It's like a cheesecake.
I don't know
but
what
it's
the
like a tres
leches are, but I
leches.
like
You don't know
cheesecake.
tres leches?
Nah.
You know tres leches. Yeah, you guys. It's like a milky cake.
Yeah.
And then but it's more like cheesecakey, but in India.
Did you bring us chart of this or?
So I show up in India and I'm tweeting about how much I love ras malai. I showed up at a conference and 5 or 6 different people brought me ras malai from their
that's
town.
amazing.
It's like New Yorkers and pizza. It's like, I got the best
That's
spot.
like their thing.
Yeah.
Okay. All right. Very cool.
Yeah. So
these stocks are going up though.
Above 71, I like it long. I think it's got 35, 40% upside.
Ticker HDB. This is HDFC Bank.
Yep. It's a huge company. $170 billion.
Yeah. It's like the JP Morgan of India, would you say? Ish.
Actually, yes.
Okay. All right.
That is, I couldn't have said it better.
When these things break, these things tend to trend. I've found emerging markets.
Look at the next one. Next one looks even better. ICICI Bank.
Once they go, they can go for a while. Is my point. Okay.
Look, monster.
Ticker IBN.
Great looking.
Yeah.
Great
Yeah,
looking
you would buy if this was an American stock. Almost anybody that sees this would say, "I'm getting long right
Well,
here."
funny you should say that because I actually got an American stock that looks just like it. If you want to go to the next one, Nicole, and that's the CBOE.
Oh, look at this! This is a fat pitch. Pitch, PITCH. So CBOE is basically trading futures options. That's the business. It's an exchange.
Are you asking me?
No, I'm telling you.
Oh, yeah.
It's an exchange. That's the business.
I believe you.
Okay. It's only a $15 billion market cap.
I know, it's super small, right?
Yeah.
I would have thought it would be bigger, right?
CME must be bigger.
Yeah.
I feel like CME is bigger.
Uh-huh.
Okay. This looks outstanding.
I mean, you want to talk about a big, the bigger. I was just talking to Louise Yamada. I love Louise Yamada. She's the best, dude. Have you had her on the show?
No.
What's the matter with you guys?
I don't know, we should,
She
right?
lives right there. She's on Park Avenue and like 90th Street.
Barry's had her on.
Dude, you guys have to have Louise Yamada on.
We would have a very different conversation than Barry had with her.
You guys will have a way better conversation.
Okay.
Barry, I remember that. Barry did a good job. Barry's a good interviewer. We bust his balls, but he's good. He's good. All right.
He's
by the way-
Barry's very fascinated. The guests tend to fascinate him, and you know that because he tells them it's fascinating like 7-8 times a show. But it's nice. All right, let's go.
Big base. If we're above a 140, that's the trade. If we're making new all-time highs, you got to own it. Target up near 180. And then you can see financials here. This is the XLF. This is the next one. So this is the remember we talked about it on this show that we got to stick the 07 highs, the highs before the great financial crisis. If
Bullshit
we're above
again.
that.
Mike doesn't believe in this.
Nobody
Okay,
cares.
fine. Well, if you did, you'd own financials right now.
Mike doesn't think that there's market memory in prices from 2007.
I won't. I don't, and I won't have it. Actually, JC, I saw my financials today, both of them.
All right, good for you.
Thank you.
Listen,
So he's already fading you. You didn't even get here yet. He started fading
Listen,
it.
everything's all time horizons, right? I walk into Mike's office. He's got a 1-minute S&P
Stop
candle
it.
chart.
Stop it.
What are you? What is
I like
that?
that.
Remember? You remember that?
Back in the day, I did. I really did.
I'm like, bro, what are you doing?
1 minute candles is amazing.
What are you doing? You're not even a day trader. Like, why are you looking at 1-minute candles?
You gotta know. You gotta know what's up.
No, you don't.
Dude, back in the day, I used to screenshot Yahoo Finance charts and text them to you and be like, buy or sell. You'd be like, dude, I can't look at this and tell you anything. It'd be like a purple line chart.
That's right.
All right. So anyway.
You step up your chart game.
Oh, yeah.
Yeah.
I sent it to Sean now.
Yeah.
Say, Sean, make this chart for me. All right. What do we got?
Financials. All right. What else?
What happens here? What happens? What happens if it wasn't a crisis after all and just a buying opportunity?
Financial. This is the XLF priced in XLK, financials versus technology.
Yeah. What if we get back above those 2020 lows?
So this is a scenario where like Apple, Microsoft take a breather, JP Morgan, Citi, Wells Fargo keep going.
Berkshire.
Jason, let me ask you a question. So I look at this chart and I say, yeah, maybe. Like, do you have conviction in this, or is this like just like a fun chart to look
Well,
at?
I own one bank stock.
Okay.
Right. And I would probably own more if we're above that.
Yeah, but this looks like more like a toss up. Like this is not a slam dunk. I mean, it's a nice chart.
Well, at the end of the day, nothing I bring here is a slam dunk.
I know.
We're just thinking about
But
like
some
what the world is like.
probabilistically, some look better than others.
You wouldn't trade a ratio chart though anyway.
I personally don't have to do that. Like if I had like a delta neutral mandate of some kind, then maybe. But like I could just YOLO whatever. I could do anything I want, right?
Right. But
Yeah.
I'm saying you're not looking at something like this and being like, okay, I'm getting short technology and long the banks. This is just giving you
I'll tell
context
you
for
what.
what
I
might
own
be
no
happening.
technology stocks and I own one bank stock. So indirectly, I do have this ratio on. If I am not long technology, I'm almost short, right?
Right.
And I don't own any technology stocks. So I kind of indirectly do have this ratio on.
Bro, if you're 10% technology, you're basically short.
Right.
Yeah.
Given what
That's right.
the market cap weighting
That's
is.
right. Right.
Okay.
So kind of. Yeah. All right. Let's go. European banks, new 52-week highs, bro. What crisis?
Yeah, that's something. That's
Are you
wild.
kidding me? European banks, new 52-week highs? Come on.
They're saying like Greece is having like the best economic year it's ever
Greece
had.
is making new 5-year highs. You see that GREK ETF?
Yeah.
Are you kidding me?
They have because it's a tourism economy.
Oh my
Thanks.
God! This
Yeah, dude, look at that.
GREK. What in the
That
world?
thing looks like looks like a social media stock from 10 years
So
ago.
last night I took a flight home from the Bahamas and it was like half empty. I'm like, wow, is this a little anecdata?
Change in character.
Change in character. So it's like coming into the hurricane season in Bahamas. So maybe that's why when we landed at JFK at 10 o'clock at night, it looked like Times Square. I said to Rob, I was like, okay, I guess everything's fine. I guess it was a Bahamas story.
So
it looked like Times Square at 10 o'clock at night.
My daughter was in Greece for the summer.
Nice.
We picked her up at Newark Airport yesterday, and the whole plane is teenagers. It's just like all these tours and schools and whoever sent kids to Greece, they all arrived on the same flight from Athens. They were in like Mykonos and then Athens, and like I'm like, how? I've never been to Greece. I'm like, how was it? Was it amazing? And she's like, oh, God, Dad, can I just have like a minute? I just got off the plane. I have sun poisoning. My sinuses are flaring up. Like, I don't feel well. I'm like, okay, honey, I just hope you had like a moron. I am. Like, I just hope you had fun. She's like, fine, it was fine, okay? Good to see you. So anyway.
Kenny Glick is in Greece right now.
Is he?
I just spoke to him. He was in Crete. Now he just got to Athens. Yeah.
I've never been. Legend.
Legend.
All right, keep it moving.
New 52-week highs, European banks. So when you look at the components.
Sorry, we're not doing this one. Next.
Hold on. What is your beef with? What a dick. What is the problem with a $70 billion Swiss insurer that's making new all-time highs? Is this beneath your line?
It's below
my line.
Is it below your line? Is it beneath you?
No, I'm looking out for the audience. Nobody cares about Zervi.
All right.
Clearly people do because it's worth $70 billion, American dollars, and it's making new all-time highs or close to it. Anyway, this is one of
What industry? Is this in money laundering?
I hope so, if that's what they need to do. I don't really care. It's not my problem.
Okay.
So this is the second largest component of the European Financials Index.
Is it really?
Yeah.
Did you know that?
Nope.
Yeah, because people care. You might not care.
This is like bigger than UBS?
Actually, funny you should ask. Next. By $2 billion.
Wow.
So you see the difference? Look, this is what people don't give a fuck about, Batnick, and they show the other one. This is the one that they do care about.
Do you see what happens? Do you see what happens, Larry?
Can you show this? There you go. This is what they care about. They don't care about the UBS. Can you go back to the UBS?
UBS is going to spend the next 2 years digesting this Credit Suisse acquisition. That stock's going nowhere.
I think we break out soon, actually. Look at this. How many times are we going to test this level?
No.
Another.
All right. Well, I guess we'll see.
Yeah.
One more.
All right. Next. So this is the one I own. I've been in the HSBC. When they were still lying to you about banking crises, this one was already making new 52-week highs. So it's one of those like, how is this making new 52-week highs? And then I got the people on magazines and television telling me that it's a banking crisis.
JC, credit to you. You were all over this.
You were too. You were the one who brought it up.
Oh, hell yeah. Me too. Okay. There we go.
Why don't you guys hug each other or something?
What'd you do about it, though?
No, I do remember looking at Credit Suisse and be like, I thought these stocks were going to zero. They weren't. They're going up.
Yeah, Credit Suisse did.
Yeah.
HSBC looks good.
New 52-week highs.
That's true. I should have mentioned that. Credit Suisse did.
Yeah, new 52-week highs. So anyway, this is one I own. I still like it. If we're above all those former highs, like kind of like CBOE, right? If we're above that, if we're breaking out, like why not own it? So it's working. You want to keep going there. And then after the best start to the NASDAQ ever, best first 6 months in the history of the NASDAQ, sell-side analysts respond with the most bearish second half outlook of all time.
Dude, this is the third week in a row this chart has come up on the show. It's such a good chart.
It's a great chart.
Yeah.
It's Wall Street strategists stick to cautious equity view. Their S&P 500 target points to most bearish second half outlook on record. Like ever. Back to 1999. They have never had this low of an outlook for the S&P.
They'd rather
in the
lose money and lose money for their huge clients than to admit that they're wrong because their cozy little lifestyle job is more important.
We should say it's possible they'll be right. It's July 27th.
Yeah, somebody testified on Congress that there's aliens here. So yeah,
no.
We saw oil trading below zero. Anything's possible.
By year end, it's possible.
Yeah, I doubt it.
Okay.
There was a great headline from Bloomberg this week from John Authors and Isabel Lee. After a misjudged first half, strategists face a short squeeze. And I never really heard it put that way. But all the revisions are going, like they showed their January price target and their July price target. And they're all, not all, most of them are higher. Do we have this chart, please? So, like, for example, Bank of America as of January was 4,000. Now it's 4,300. But even still, just eyeballing these, the only one who's, like, meaningfully above where we are right now is FundStrat.
Everybody
else is, like, below where we are right now.
The key indicator here is the earnings revisions. And you aggregate all the earnings revisions, and you see such a beautiful lagging indicator over price. So you see price of the S&P 500, and then the earnings revisions drag. And then the exact opposite. You see prices start falling, and then earnings revisions keep getting downgraded. Like in aggregate, you really see that. It's like, remember the Sonic the Hedgehog, and then it would get chased around by that little dog thing, remember?
Tails.
It's like that with
Dude, that's such a great point that you make, because we know for a fact that price moves ahead of earnings and anticipates it. And price is really discounting what tends to happen, not always, but most of the time the market gets it right.
Yeah.
Tom Lee was explaining in that clip we played how most strategists are becoming bearish because they're talking to their buy-side clients. They're talking to the asset managers who are maybe chasing.
Throw the next chart. You'll see. This is what their clients are doing, to your point, Josh.
Let's say, okay, this is
their clients.
Right. Overweight cash,
Yeah, it's unbelievable.
overweight healthcare, EM equities,
And underweight equities.
alternatives, which is another way to be bearish, staples,
JC, we were just talking about this.
and
that there's
way underweight equities.
There's a divergence between individual investors and institutional investors. Individual investors are bullish, as they should be. Market's going up. What do you make of this divergence?
Well, they're more volatile. They react sooner, the individuals. There's more churn. These take a long time to position. These are much bigger institutions. So you tend to see more whippy action out of like an AAII poll or something like that.
You know what else, though?
Also, remember, you need bulls in bull market to buy stocks in bull markets to have bull markets. Right?
You know what else is interesting? Like people, if this were like 2 years ago, people would be like, yeah, of course they're bullish. What else are they going to do with their money? There is an alternative now, and we're still in a rampaging bull market. Like you could, what else they can do with their money? How about 6% in T-bills?
Right, but just think about that. When it became such a no-brainer to get 6% in T-bills, ended up being the worst decision you could have made, right?
Yeah,
Think about it. When it was such a no-brainer, you could have done literally anything else and made so much more money.
You just picture the mindset, somebody being like, why would I take risk when I could just earn, I guess in January it was 4%. Why would I take risk when I could just earn 4% risk-free in T-bills? And that's not wrong, but this is why.
Because you missed a 45% move in tech.
This is why you would take risk.
That's right.
It's a very good point. Okay,
Yeah.
next.
And then JP Morgan's poll, same thing, right?
Yeah.
Are you more likely to increase or decrease equity exposure over the coming days, weeks? 17% are planning to increase equity exposure,
Which is as low as it's been.
which is never okay.
So, needless to say, there's a lot of dry powder, as they say, to add to equity. So I think that, it's not that, contrary to popular belief, it's not earnings that drive prices. It's not the economy.
No, it is.
It's positioning.
Oh, well, it depends on time frame.
It's positioning that
Do
drives
these
prices.
people
In the
buy?
short term,
But
yes.
do these people buy the dip, or do they look at a dip and say, "You see, we were right"? I don't know the answer.
They got to chase it higher.
I agree with JC. Unless there's a meaningful pullback, I'm not saying like 5%. That's not, unless there's like a they're going to have to chase. If the market is up 14% at the end of October, tough shit. Buy.
I mean, you can have a stealth correction underneath the surface in the back half of the year where a lot of stocks correct. The indexes might trade sideways or churn, and you have huge winners underneath the surface. That could very well be what we have.
Be very normal.
Very normal. Yeah.
Okay,
All right,
next.
Let's make some money. So this is, if small caps are ever going to start to outperform, this would be a perfectly logical place for them to do so. It's where it started in 2020. This is exactly where the ratio between small caps and large caps bottomed out.
Looks a little bit like XLK, XLF. But a little bit, to me, this is a little bit cleaner, a little bit more convincing.
All right.
A little bit.
Okay.
A lot of industrials, a lot of banks in the small cap
Materials,
index.
energy,
Yeah.
healthcare. Oh, yeah. All right. And then zoom out on small caps. Does that look like a bad chart to you?
You like this? All right, so you like this pullback to?
Stair step higher.
Jason, credit to you. Sometimes you just got to zoom out.
No,
Right?
this
Like,
is
I am
good, though.
guilty.
This is 25 years.
I'm guilty of being a daily chart guy, but sometimes, this just tells a much different story.
Whenever in doubt, zoom out. One of the beauty of technical analysis is our ability to look at markets using multiple time frames and to start with
but wait.
longer term perspective and to work our way down.
This consolidation in small caps dates back to 2017.
Yeah, I wouldn't put it that way.
What do you mean? The former resistance?
No, it's been consolidated
2018.
for a
Those
couple,
are
for a couple
2018
months.
highs.
I guess that's what I'm trying to say.
Yeah.
It's been above, it's been lower,
Right,
but
right,
it looks like
right.
since 17, it's like a wash. Okay.
Yeah,
All right.
former resistance turned into support.
Yep.
Pretty normal.
Yep.
Yep. Industrials, all-time highs. No stock in this sector index is more than 4% of the index.
Is that right?
So it's broad.
Okay.
Super broad.
Yeah, industrials captures so many areas of the economy.
You have any favorites?
Yeah, next chart.
I like Caterpillar too.
This is such an easy one to understand and pull the trigger on.
Well, maybe now, but we were buying it at 170 because we were essentially reverse engineering the bull market and essentially saying, if this is a bull market, that means that we have to get rotation into industrials. That means Caterpillar can't be breaking below the 2018 highs. That would not be a bull market. This would be the time to buy if it is a bull market. And sure enough, it's worked out really well. So I think this gets up to 320, 340.
Every industrial I can think of is at an all-time high or 52-week high at least. Like all the big ones in my head that I run through.
Honeywell.
Honeywell just had a nasty day today.
Yeah, maybe today, but I'm just saying, like, generally speaking.
Yeah.
How about Boeing? Boeing had a beautiful base.
Boeing. Oh, yeah. Yep, aerospace and defense in general. And then here's a really interesting one. SoftBank just bought $500 million worth of this one. It's a $10 billion. This is a specialty industrial machinery company, which
Symbotic SYM is the ticker.
Yeah, but this doesn't mean anything. Specialty industrial machinery. Really, what it is like a software. It's like a, like it's technically industrials, but it's like in the technology, robotics of industrial warehousing or something like that. I'm not going to pretend to know.
It's automation in warehouses.
$500 million from SoftBank, though.
Raise the roof. All right, what else we got?
So hold on. If we're above 41, which right now we're around those levels, below 40, it's going to be messy. But above 41, really interesting. And this is a SPAC that doesn't suck.
Yeah, there aren't a lot of those. Okay, very interesting.
Yeah. So then this is what I'm looking at. So this is one of the things I was talking about over lunch today. When you look at the fund manager survey, commodities have just been left for dead, right? The investors, fund managers are the most bearish commodities since crude oil was trading below zero several years back. And when you look at a ratio of inflation-protected treasuries relative to nominal, so in other words, what the bond market is pricing in for inflation,
right,
just overlay crude oil over that. They look exactly the same.
This is tips priced in nominal treasuries. What is IEF, 7 to 10 year?
Yeah.
Okay. And you're juxtaposing that with crude oil futures, and they look like perfectly aligned, these two charts. Okay.
Yeah, I think investors are bleeding commodities for dead. I think people think that inflation is not a problem anymore. And you were starting to see this tick up a little bit. I think it's worth paying attention
Crude
to.
At 80, and the Biden administration has already said they plan to start refilling the Strategic Petroleum Reserve. They haven't put a barrel back into it. It's at a 40-year low.
And where is this? Is this in the Bronx?
Keep it in the Bronx. That's right. It's right below. It's right below Yankee Stadium. No, but for me, like the big surprise would be an oil breakout in the second half of the year that like not a lot of people are even thinking about.
Right.
That would be, those stocks have sucked all year.
Yep.
Energy stocks. That would be a really interesting outcome for the second half.
And think about there's only 4% of the S&P 500 is energy. 0% of the NASDAQ 100 is energy.
Yeah.
So if they're leaders, they're not going to make a dent in the overall indexes.
It would be a value comeback. It would be, there's a lot of small cap energy stocks.
Yeah.
It would, right. It would check a lot of boxes for a reversal.
Yep.
Okay.
For sure. So here's oil. So look at those 2018 highs. That former resistance turned into support. As clean as it gets. If we're above the mid 70s
look at that.
in
That's
oil,
good.
I think you got to own it. I think you got to be long energy. If oil's above 75, not to mention oil got cut in half, and energy stocks have hung in there really well.
That's right. That's right. Because they didn't believe it was permanent. Where do you think crude can get back to?
I think definitely
the 22 highs,
130 and head up to 250 potentially.
but do you need like
Whoa,
250?
250?
Yeah. Why not?
I mean, I don't know why.
Why not?
Okay, if crude gets anywhere
Dude.
near that,
Dude.
you're going to see these stocks double, all of them. You're going to see them double in size in the index too.
if crude
First of
goes
all,
to
they'll
250,
double a crude at 100.
Things are not doing so well over here if the crude is at 250.
Maybe.
You got an oil
I
stock?
think, and I'm not necessarily saying that crude oil is going to get to 250, but as investors, if we're not thinking that that's on the table, I think it's being irresponsible. Again, I don't know what oil is going to. Oil can go to zero. I have no idea. But to just take 250 off the table, I think it's foolish. I think we need to think that that's on the table.
What was the 08 high? Was it 180?
150, 148, something like that.
Yeah. Okay.
Yeah.
All right.
So energy hasn't even broken out yet. This is the energy sector index, still stuck below the 08 highs. So we haven't even broken out yet. So if we're talking about like, this actually breaking out and you got the XLE in the 200s, where do you think oil is? So look at some stocks. I like I'm long Chevron. There it is. So Chevron, I'm long against 150.
Yeah, clean.
It's clean. Below 150, then forget it. But above 150, I like it long.
Did you do it like on a weekly closing basis or immediately?
Well, I'm already in it.
That's a good question. So
When you
answer
say below
that.
150, you don't want to be in it. But how do you can it go down below 150 for 10 minutes?
Everybody's different, right? So if you're a day trader.
No, you though.
Yeah.
Me personally, I mean, listen, I'm in the calls. Like I own options, so I already have risk management built in. On the common side, 150. I think a weekly close makes sense. A daily close can make sense. It depends on who you are. Everybody's different. There's no like right or wrong way to do it. We all have different objectives, time horizons, risk parameters. Like, are you trying to make money? Like, oh, JC, what do you think of Apple? It's like in the next 10 minutes, in the next like week, a year. Like
if it was 143 on a Wednesday, would you probably close it out?
if it was 143 on a Wednesday, I would not be in it at that point.
Okay.
Yeah, no way. Zero chance. Go back to the other one because I want to show the ratio.
When it falls to 143, that's when I'm like, yeah, but there's a dividend. that's when I start.
Gross.
That's when I start reading the 8K. All right.
Wait, who else owns this thing?
What?
Yeah, no, Vanguard's here. No,
That's
it's
when
okay.
I'm on.
Buffett owns it? Oh, how bad could it be?
That's when I'm on fucking whale wisdom, and I'm looking to see if are there other smart hedge fund managers.
Vanguard, BlackRock, and State Street own it.
Wait, but I don't even know a lot of these hedge fund managers. So I'm like, Feldman, probably Jewish.
Yeah.
I don't know.
Yeah.
He's long.
Yeah.
Like this is not risk management. I'm just joking, by the way.
But people really do live that way.
No, I know. We know them. We know them in real life.
We've been them.
We've been there. Hello.
We've been them,
Still
so we
do.
know them.
What? Think it's got a shot?
Yeah, that is a shot. Yeah.
What? What are you laughing at?
No.
Wait, what are we looking at for the audience?
So this is
coiled spring.
energy relative to tech. In the same way that we looked at financials relative to tech, how about energy relative to tech?
I like this better.
The only thing people would quibble with
Because this isn't crashing.
They would say, "What's this gray line? You're just putting it there because that's where it is."
Yeah.
Yeah.
No, right? I mean, that's what people would say.
Yeah.
Yeah.
And then you would say,
You can say whatever you want. It doesn't matter to me. I put it there.
no, but if people wanted an explanation, why is the gray line that you were saying is support? Why'd you draw it there?
Well, that was support in 22, and it was support this year. And if we break, I mean, listen, it's a range. It's not like an exact
100%,
ruler.
of course,
So it's kind
of
of
course.
like, is that perfectly
Right,
drawn?
no.
Probably not.
and
You
look
know,
look how thick you've drawn it. So
Super
I should have drawn it thicker. Actually,
Yeah,
you want to think of it like a mattress.
Should be the whole chart.
You know,
it's a lot of support between the bottom and the top.
can it get going? So anyway, something to think about. Flip a couple of charts there. We saw Chevron already. What about?
Whoa, what is this?
This is uranium. Throw this out. We're not doing this.
Listen, if you have enough Canadian uranium exposure in your portfolio, then that's for you. But for those
I wish
who
you
do
could
not,
show a 50-year chart of this. It's always a rug pull.
I'm just saying, if it's above 25, I like it long.
Never ever build another uranium-powered electricity plant in this country.
Dude,
ever.
he's just saying.
I know. It's a
I
fail.
don't
It's
care.
a fail. Instant fail. All right, now it's like showing me cannabis stocks.
Okay, hold on, but go back real quick
like
because I
you
want to be
want me
clear.
to lose money.
I want to be clear. If it's above 25, I don't care what Josh just
Above
said.
25,
I don't know
everyone
anything about
involved in it
uranium
is
plants.
smoking crack. Okay.
If it's above 20, if it's below 25, you're smoking crack. Above 25, I think you're smoking crack if you're not long.
Got it. Okay. Well, more for you then. More for you then. I don't want any.
What about, speaking of smoking crack,
Bitcoin, Ethereum.
That's a no. It's
There's nothing to say about
sideways.
this.
they've been ripping all year. Can you think of a better performing asset in 2023?
They've been repping because they went down by 2/3.
Tech stocks didn't?
I will get interested again the next time there's movement on the ETF, and until then, I have no interest at all. Honestly.
Well, fortunately, I don't care what you're interested in.
I know. I'm saying me personally, if there's movement on the ETF front, I pay attention. Until then, I can't.
The
All right.
price of Bitcoin and ETH has been pretty boring for the last couple of weeks. Just
Are you
sideways,
not?
up, down, up,
it just
down,
broke
up, down.
down. Actually, why don't we take a look at that? It's a funny thing. A funny thing just happened. So just to give you some
That's
perspective,
a breakdown?
settle down.
You said it. You said it.
Relax your soul for 2 seconds and let me set the stage.
Relax your soul.
Calmer than you are.
Okay.
Calmer than you are.
Look at the support in 21, in the summer of 21, early 21, then we got the breakdown last year. Yes?
Yes.
We came all the way back there this spring and failed. Yes?
Yes.
We just came back here these boring weeks that Batnick is talking about and we failed again. Yes?
Yes.
Okay,
No.
now zoom in, Nicole.
No, I don't. No, I reject that premise.
Do you
Zoom
have,
in.
Do you have 1 minute candles of this?
Yeah,
No.
It's too early to
These
say
are
that.
4-hour
It's
candles.
too early to say that it
No,
was rejected. I'm sorry.
down.
4-hour
Down.
candles.
Down. There it is. Too boring for you? Breaking down to new 30-day lows? Is that boring for you?
It's not a breakdown.
I feel like this could we could reverse in an hour
Yeah,
on a
dude.
Saturday afternoon.
Funny you should ask. Next chart. He held the lows.
All right. Next.
I don't understand what your problem is
Dude.
with these charts.
he's like the
No,
guy.
no
he's like-
problem. No problem with the charts. It's the asset class. I wish I had a gong. I would gong these.
First of all, you trade way shittier shit.
Oh, for sure. I do.
Bitcoin's like 400 billion. Ethereum's like 200 billion. You trade like, I don't even want to know what you're putting on.
If you believe those market cap figures.
You think it's like a lie?
The guy they just arrested, Mashinsky, he said like the whole thing's leveraged. Nobody actually owns any of this shit.
Okay. Well, in that case.
Oh, the criminal said it. Must be true.
yeah, it must be
criminal
true. All right, so do we have to give the profits back or no?
Yeah.
No.
Oh, okay, good.
No, the profits you get to keep.
All right, wow.
Look at this piece of shit.
Fortunately, that's all I'm interested in.
Marathon Digital. This is crypto miner.
Yeah, this piece of shit's only up 800% this year. So
True.
And if
yeah.
crude goes to
Can't argue.
and if crude goes to
Can't
250, this miner will rip.
Yeah. Yeah. I'm taking out a mortgage in my house to buy out of the money options on this one.
Yeah.
If it breaks out above 20, I'm back in. This was one of the best trades I put on my entire life, as a matter of fact.
Where did you get? You got long.
We bought the 14 calls, January 14 calls when it was like at 12, and it got 6 points in the money. So
Wow.
yeah.
All right.
Yeah.
Well, off she goes.
So we want to go to the next one. So Coinbase, same thing, monster
This thing
move.
was a monster trade, and I was going at Straza over this.
Yeah.
And I think it was like 40.
Josh goes, I think it's going
Yep.
to zero.
No, I
30
think I
something.
said I dare you to buy it, and
Yeah.
and I hope he did.
No, I think he sold it.
No, he buys that a lot. He buys this a lot.
Oh, he buys and sells it.
Yes.
Okay.
Yes.
All right.
They were on the plane on the way to Singapore, and he's like YOLOing like riot out of the money calls.
Gotta do it.
Playing it like Buffett. So Coinbase though is up substantially this year.
It's only
Having-
quadruple, no big deal.
Yeah.
So if it, but look, hold on, mission accomplished. Go back real quick. Mission accomplished, right? We're back to last year's highs. So now it's got to digest. So below 120, it's a mess. If we can ultimately resolve higher above 120, I think you buy it again. And this is the micro strategies. I think Josh's exact quote was, go to the next chart, Nicole. Josh's exact quote was one of the best quotes of all time. I won't buy this stock if you delivered the shares in a Bentley, was his exact words.
And I still won't. Stand by that. I stand by that.
I thought that was a great quote.
When did he say that?
He said that in Jan. He said that at 133. If you want to go to the next chart. So this is now, it's pushing 500. And again, like
All right, fuck you.
like Coinbase.
We're gonna edit all this out, right?
No, but that was funny. But it was sentiment. Like, I wouldn't buy this stock if you delivered the shares in a Bentley.
That's a buy.
In fairness to me, I'm not shorting it. I just don't care.
No, fine. But my
I
point.
still wouldn't buy it.
Okay, so the reason that we liked it then was because
That's what I said.
in the bear market, isn't that something you would say? He's like, yep, I would say. So hold on. So in the bear market that we had in tech, the short sellers, instead of covering their shorts, they added to short positions.
They're responsible.
They came into the year the most short they were anything. MicroStrategy is one of those examples. Carvana, you think the fundamentals of Carvana have changed? Things up 1,300% because of the positioning, not because of the earnings.
Yeah, I'm with you. There, you did not have the same degree of turnaround in the businesses that we're talking about as you just had in how offsides people were and how expensive it's been for them to reverse themselves.
So now let's think about what happened. Bitcoin had a pretty decent move, nothing special. This thing's up 400%, MicroStrategy. So
this thing has far outperformed Bitcoin.
and Mara and Riot. So like from, we might not have an ETF to buy Bitcoin, but we do. We have vehicles. And whether it's an ETF or a stock, we have vehicles. And isn't that all that matters?
It's true. If you wanted to be bullish on Bitcoin, this was a really good way to do it.
Any of those, by the way. This is just one of them. Yeah. Any of those. So if we start breaking out above 500, I think you got a new trade. I think Bitcoin, you got to be above 31,000 for me to be interested from the long side. Otherwise, I'm not touching it. So I'm with you, Josh. So I need to see a breakout. And then this is probably what is my biggest question. I don't know. I can't figure out how the 10 years going to resolve.
The 10, it's weird. Like the belly of the curve. Like everything shorter than 10 years is 4% plus yields, and everything longer than 10 years is 4. Now, like you got steepening in the long end of the curve. So it's weird. The 10-year, the intermediate term treasury is where the biggest question mark is.
Yeah.
So
think about
I don't
it
know
like
how
this.
it resolves either.
So think about it like
that
this.
is the question.
What do you
Big move
have?
to the
You've
upside
got
today.
growth stocks, technology stocks, all of these things ripping. What is that pointing to? Lower yields, right?
Yeah.
But at the same time, now you have crude oil potentially bottoming, tips. You've got some of the commodities starting to bottom.
Dollar.
What is that pointing to? Higher yields.
Maybe it just grinds around here. Maybe this is just what the 10-year rate's going to be for a while.
Honestly,
Wouldn't be shocking.
I could not agree more with you.
Yeah.
That is where my head.
Because that's a tug of war.
Yeah.
So, and
the
you don't need a winner.
And the market loves that.
Yeah, I agree.
Like I'm with you on that. Like the pain trade for bonds
Sideways?
is sideways. I think. And clearly the market loves that, right? So go to the next one. You can see this is the alternative.
This is where it breaks out.
Go to the next one. See? No, go back, go to the red, go to the red. There you go. See? So is this a failed breakdown in
JC
yields?
is like Black 90. Wedding singers? No, wedding crashers.
Okay, next.
So this is really interesting because in gold you have in gold you have the price of gold, and then in black you have gold relative to S&Ps. So in the 2000s you had gold doing really well and also outperforming stocks. And then while gold has done nothing over the last decade, look how it's done relative to stocks, right? So just think about the opportunity cost that you've had to endure not being long stocks because you chose rocks instead.
Good chart.
Yeah, Never rocks, always stocks.
Well, there's a time. Well, literally
for the long term.
Well,
for the long term.
Well, there was 10, 12 years that you wanted to be in the rocks.
True.
Right?
True.
So here, go to the next one.
I still didn't.
So then these are the rocks on an absolute basis.
They look good.
Are we going to get this breakout?
I can't believe it's not 2,500 an ounce. I can't believe it. I'm not a gold guy.
I was going to say, you're not even a gold bug.
I can't believe you bought GDX.
Yeah, I bought it and lost money on it.
What's the matter with you?
It's a piece of shit. Like every other gold miner.
All right, tell me how you really feel.
I really feel like it's a piece of shit.
Well, look at this one. This one's less of a piece of shit.
And that's like supposed to be the blue chip.
Look at this one. This is more of like a turd, maybe less of a whole
I hate
piece.
all these stocks.
Want to go to the?
I hate this whole mentality. This whole
This is
sector of the market.
Alamos Gold. This is the one of the blue chips in the space.
Alamos. What?
All right.
Listen, if we're above 10.5 and you want some gold exposure, this is one of the least shittier ones.
Next.
How's that?
These are all Canadian con artists. What else do we have?
I believe this one's from Toronto. Okay, so this is you texted me the other day about Empire State Building.
I did. I bought it. I bought it anyway. I didn't even wait for you. Didn't respond.
All right.
So,
well,
I'm making money.
You didn't want my response anyway.
No.
So
wait, time out. I gotta jump in. Last time I texted you, what do you think of SLG? You said I don't. And then I made 75%. Give me a clap.
All right.
Go ahead. Thank you.
Well.
That was so sad. Him having to request his
clap.
That was very emasculating.
Yes. So REITs left for dead, man. Nobody likes them, and when nobody likes something, I'm interested.
Josh Brown likes REITs. I like them, and I like REITs that you wouldn't think I would like.
Why don't we take a look at some?
What is this?
Alexandria Real Estate Equities, bro.
I've never heard of this.
Well, maybe you should look at more REITs.
Where is it? What do they do?
I think they're like in all the major cities: Boston, New York, DC. Look at me with my fundamentals, huh? Look at me. This is an office REIT, first of all. If that means anything to you. And I see us back down to those former resistance levels back from 07 that you guys pretend don't exist, right? And we're back there finding support.
Oh, no, they exist. They just don't matter.
Okay, well, clearly it matters this time again. So if we're above 120, I think you own it. Look at Public Storage. Here's another one. 52 billion market cap, by the way.
So do you like this one?
Was
this the Amazon one?
I know it. I'm not in it. No, you're thinking about Prologis.
Right.
This is like
PLD.
This is like 3 Dogecoins
This
in
is
market
Public
cap.
Storage, PSA.
Dude, this thing looks like trash.
Does it? I see it finding support. Right,
Come
but
on,
everybody
dude.
agrees with you.
Come on. Look, this is a daily. It's just garbage.
Zoom out.
I can't. Sometimes I just
Then
can't.
don't.
It's garbage.
Michael's looking at 30-second candles.
Yeah, dude.
I'm on the
relax.
daily. It's trash.
Hold on. So if we're above those 16 highs, you want to own it, knock yourself out. Look at this one. CoStar.
So I have one I like better than this. I like real estate services better than I like REITs. Real estate services are going to be the companies that help all these distressed situations. Like, you don't have this chart. CB Richard Ellis.
What's the ticker?
I think it's CBRE. Or it could be just CB. No, Chubb is CB.
CBRE Group.
This is going to break out. These are companies that are doing like outsourced real estate for Fortune 500 companies. It turns out large corporations with lots of real estate assets or leases or whatever don't actually want to deal with it at all. They want to outsource it all. That's going to be a good business right now where nobody knows what the hell to do with all their office space. So CoStar is in this service group, the brokerages, the outsourced, services. I think that's actually a great place to be. What do you see in this chart?
I see it going from the lower left to the upper right.
Yeah.
And that's cool. And I see a nice base over the last few years. If it breaks out above 95, you buy it. In the meantime, you sit tight and watch it.
Okay. What else you got in here? This is me. You don't love this? Did you update it to account for the rally today?
I did not.
Stock's on fire right now.
Oh, big day
It was
today.
up 2%?
Up 4.
Whoa, hey now.
Yeah.
Big volume.
It's a REIT.
Big volume.
It's only $2 billion, the Empire State Building?
I'm just going to tell you that the Empire State Building will be fine. This is not. It's an $8 REIT, but it really shouldn't be $8. It's this thing's going higher.
Should be at least 11.
Well, it's paying a dividend. It's buying back shares.
Yeah, that's
It's they don't own 50 buildings. They own a couple of buildings. The Empire State Building is like the premier property in New York. They are at 90% occupancy.
I don't know about premier property.
No, it is for office real
Dude,
estate.
it's junky offices. They're not nice.
No, they've been doing substantial renovations all over the inside of the building.
I've never been to an office in there. Have you?
No.
They're probably not
Yeah,
good.
I looked at Office Space.
Okay.
They're doing amenities in the building now that you would not believe. They are.
Really?
They are. They are.
It was bad for a while.
They're doing all kinds of stuff.
Granted, I haven't looked at Office Space in 13 years or something like that. But
Listen,
nevertheless, when I went, it sucked, all right?
Listen, the point is there's a flight to quality in commercial real estate in big cities. It's not that companies are running away from the cities. They can't. That's where their younger employees live. It's where their customers come and visit them.
Yeah.
What's really going on is the Class A tenants are crowding into Class A buildings. I would not be investing in B buildings or C buildings.
Is Empire State Building a Class A?
It's considered a Class A. It's definitely a Class A location, and they're doing a lot of work on the building, and they are beautifying this thing inside and out, and it's going to be fine.
All right.
So my personal belief.
There's a website because I used to have a view of the Empire State Building, and there's a website that, you know how it changes colors? It tells you why it's that color, like every day.
Oh.
And it's for the dumbest reasons you can imagine. Like, most of them are not like, you would never think that
Most
that's
of them
the
are not
reason.
like the Giants just clinched and they're going to go to the Super Bowl. That's not right.
Well, that happens every now and then, I suppose. But,
Yeah.
you know, there's literally a reason for every day. You'd be sort of like, somebody's coming into town and it's for them. Like,
You
it's
bullish
crazy.
on the Dolphins this year?
They're going to the Super Bowl.
Next chart.
Dolphins 30, 49ers 23.
All right. How many charts do we have left?
I think this is it.
What is this?
So this is 4-Star Group Real Estate. It's a subsidiary of D.R. Horton, and it's making new all-time highs.
Looks
so
incredible.
that catches my attention. So this is small cap. Look at it breaking out. If it's above 25, I think take a look. Yeah, FOR. And I think that might be...
That's it? We're out of charts?
Do we have any more? Nicole? Oh, Iron Mountain.
Oh, what? I don't know what this is.
So there's a data center REIT. Paying 4%, making all-time highs. This thing's a freaking beast. So do you want
This
to
used
own
to
the
be-
Empire State Building, or do you want to own this?
This used to be filing cabinets. You know that?
Nice pivot.
Yeah. Well, right. They did the digitization of records.
JC, you did it again.
Hold on, the last one.
One more, okay.
Last topic I want to mention quickly is healthcare. You know, we had a massive bear market in equities. A lot of things went down. This one didn't. This one went sideways.
Dude, you crushed it.
Can I throw the trade?
Give us the trade.
Hold on. So zoom out in healthcare. Does that look terrible?
No, I'd buy it.
Second largest component of the S&P, second largest component of the Dow, FYI.
Pfizer, disgusting.
And then here's the trade. This is what
Give
I
it to
bought
us.
this week.
Hit us.
Give it to him, Nicole. The AbbVie.
Yeah.
So this spun off from Abbott Labs, and it's now bigger than Abbott Labs.
Yeah.
Wow.
It's a beast.
So I like it. If we're above 135, I like it long. I'm very, very long.
Ladies and gentlemen.
Pfizer and Bristol Myers, 52 close. Yeah, JC, you crushed
The
it.
JC Chart Show. It's incredible. We do a couple of things really quickly, but let's just tell people while the iron is hot. How do people sign up for more of your stuff? They go to allstarcharts.com.
Yep.
Okay.
Yep. Go to allstarcharts.com. You want to throw up that last slide, Nicole? If you want to check out the trailer for the docuseries that we're filming out in Asia, the boys just got back today. Go to
Like Chartists Gone Wild, basically. Is that the pitch?
we didn't record that part, but
Go with that.
Wall Street to allstreets.com. Check out the trailer. It's really, really cool.
Very cool.
These guys had a lot of fun.
Yeah.
Jim Rogers' house. That's pretty cool.
Hey, throw this up. U.S. homeowner equity. Here's why the housing market didn't blow up when interest rates quintupled and mortgage rates doubled. The consensus was that real estate is in big trouble and the housing market's in big trouble. And, you know, it seems like we could all look back at it now very smugly and say this was so obvious. But, like, really, the equity stake that homeowners have, yourself included, in their homes is like the unsung hero when you have now the value of houses going back up again. If you didn't sell, and most people are not looking to sell because they don't want a new mortgage at 7% or 3%, these are equity-rich mortgages. So where the holder's equity stake is at least half the property's worth, that's now 49% of the national total in the second quarter. That's a huge surge over the last 4 years. During the pandemic, it was about 27%. And as you can see here, it's a lot of states that maybe you wouldn't think of off the top of your head. Nevada, Louisiana, Arizona, Florida, Utah. You've got those are the states where it's declined. But if you just think about your local area and the people that own homes around you, that is, to me, like a very unsung hero of why the consumer has been strong and the housing market hasn't fallen apart. People just have built up a lot of equity. They're okay on their mortgages. They were able to refinance no problem. For 3 years, you could refinance for almost nothing. That's not the kind of thing that changes overnight. It would be really hard to have a recession without home prices falling. and they're just not falling, and they're not turning over either.
Well, guess what? Paradoxically, if rates weren't at 7%, maybe you would see price corrections. The reason why,
I agree.
right? People can't sell, and
Therefore they don't.
Therefore, they don't.
No, I 100% agree with that. But that is not in January and February. No. That is not the outcome that you would have been predicting as they were raising rates by 25, 25, 50, 50,
well,
75,
but just think about
75.
the best performing sector in the back half of last year when the market bottomed in June was consumer discretionary. Home builders were already making new all-time highs. So we've already seen a ton of strength from the consumer. And even still, with the rally that we've seen in technology, on an equally weighted basis, the consumer is still the best performing sector.
Yeah.
And you look at airlines, and airlines are not consumer discretionary, but they kind of are. They kind of are.
Cruises.
Gaming stocks are making new all-time highs.
Costco.
Cruises doubled.
Bro, Costco's
a staple.
Listen,
fair.
You got 3.6% official headline unemployment. You got people with money in the bank that's now earning money. Think about how wealthy people feel right now. Home prices have stopped falling and are now bouncing. Okay. People have gotten raises. People's cash balances in the bank are now earning them even more money. Their stock portfolios are racing back to all-time highs. Of course, the consumer is still going for it. That's to me the least surprising externality of this. Are you calling Twitter X? I'm not going to.
No, nobody is.
No, is anybody?
No.
When you send a tweet, are you Xing? Is that?
I think you're Zeeting.
Nobody. What are you laughing at?
Are you Zeeting?
Oh, I put something in here. Oh, this.
No one is going to say Z.
Oh, I thought.
Is
X,
the threads already dead? Have they shut it down
yet? But it
yet?
said Xeeting. How do you pronounce that? X-eating?
Oh, you're being serious.
No, I swear to God.
Are you on Threads?
I tried it out because everybody else did, and it sucked, so everybody left.
Is everyone gone?
Yeah.
I can't use it for compliance reasons.
It's like 90% of the users are down.
Listen,
Nicole said I can't use it, right? Why? Don't you want to photocopy all my tweets and put them in a file?
No.
Oh.
It's not even chronological.
Twitter is unmonetizable as we know, right? Not just
I don't know.
Not since Elon bought it, but it's just impossible to monetize. They were doing $5 billion in revenue in 2021. Now I think they're going to do 3. That's what the reports are. LinkedIn did 15 billion.
We have this as a chart. This is like this is something most people probably don't know. I love LinkedIn. So.
Alex Morris, by the way, great chart, great.
You use
great
LinkedIn?
writer.
Do you talk like
No.
You really? Oh, why do you say it like that?
What am I going to use LinkedIn for?
I don't know.
Like look for a job?
Like find babes? I don't know. No, I think it's great. I talk to people on LinkedIn.
Who do you talk to on LinkedIn?
It's people that are using their real names. It's professionals.
No.
I swear to God, I use it all the time.
No.
I think it's great. Okay.
Right.
Real quick, we're finishing up here.
Are you using MySpace too or no?
Can we talk about Inter Miami? Can we talk about soccer like for 10 seconds? I know you're Canes fan, Miami Heat fan, you're Marlins fan?
Yeah.
Ish.
I grew up an Orioles fan.
All right. Are you going to get into this soccer thing? You guys have the best player on earth playing for your team. I think David Beckham's one of the general managers of the team. Like, are you gonna get excited about this or not really?
Cubans don't play soccer.
Really?
Nah.
No excitement at all.
I don't care.
You know the guy that owns the team is a Cuban billionaire.
No, I mean, listen, I'm happy for them. It's good for the city.
Jorge
like you
Mas.
should see where they play. Like they need a new place.
Well, I was going to ask you, they're playing this shit in Fort Lauderdale of all places.
Yeah. Well, they didn't have a place for something like this to occur.
Okay, so they'll build something.
Yeah, for sure.
They'll build something hyped up in Miami.
Listen, I'm super stoked for the city. I'm stoked for the people who care about that sort of thing. But like, I watch like the World Cup when the U.S. is in it. It's fine, you know.
Can I tell you something? I watched the first game. They played. I think they played.
You were texting me.
Yeah.
I was like feeding my baby.
So
I'm like, I'm not watching soccer.
He didn't. So the first night they got Lionel Messi. They didn't play him in the first half of the game. The second half they put him in. The crowd like loses, and everyone's there. Like Kim Kardashian's there, LeBron's there. Like it's a big deal. They put him in the game. I think he scored a goal, like immediately. The second game they played Atlanta, I was watching, was last night or 2 nights ago. He scored 2 goals like within 15 minutes. This is unheard of shit going on. It's the best player in the world, and Major League Soccer starting this new tournament where they're going to play the Latin American League, and they're like very big stakes. And I feel like it's at the beginning of this finally becoming like an American interest thing.
I hope it does, because
That's not going to.
the problem is Americans play other sports, right? In a lot of these other countries, their best athletes play soccer.
Right.
So their soccer teams are like our best athletes play football and
Yes,
baseball.
but if
and
we
like,
can now recruit the best soccer players from
100%.
around the world,
Yeah.
and they were willing to play for Major League Soccer teams in America, that changes the game.
and also it brings it to the local cities, like the kids have like a team to root for and stuff like that. I think it's great.
You watch soccer, right?
Some.
What's
I
your-
mean, Ted Lasso kind of got me back into soccer.
Nice.
but,
Okay.
Yeah.
I think it's kind of cool. The guy that owns it is he owns 35% of this stock, Maztec, MTX. Do you know
Yeah.
what this is? It's like a Cuban run infrastructure company based in Miami, but it's public.
Yeah.
Okay.
I've had my Miami high school friends asking me about this stock for 20 years.
What's the ticker?
Maztec? MAS?
All the Cubans ask you about Maztec?
Yeah.
Okay.
They all like know somebody,
So, dude,
they think they know.
This guy, Jorge Mas, pulled off quite a coup.
Yeah.
He got,
MHH.
he got the best player in the world to come play for him.
That's some Pat Riley shit right there,
That's,
right?
I mean, look at this stuff. I mean, that seems like kind of a big deal. Apple is charging $12 a month for MLS, like get all the games, every game, every team. New York has 2 teams, and I don't think either one of them are particularly good. All right, you have fun on the show today?
Always, man. Nice to be here.
Did you have fun today?
I like Batnick's shirt. Thanks, shirt.
It's important that everyone has fun.
I always have fun with JC's here.
Nicole, you did an amazing job with the charts. Just want to say thank you.
And she was taking photos.
And photos. Nicole is crushing it right now. All right, let's do favorites. Michael, why don't you start us off?
I listened to a great podcast on vacation. Derek Thompson's Plain English. He was on. He had Julia Alexander from the Puck, or from Puck. Is it
Puck? Yeah.
Talking about what's going on with streaming, linear movies, and the debacle at Disney and Netflix and Hulu, and how that gets resolved. And it was just great.
How is Baha Mar?
It was great.
Have you ever been there?
I had a great time.
I've never been there.
Great time.
Yeah.
I mean,
what was your favorite part of? What was your favorite part of the vacation?
So it's been a couple of years since we were away without the kids. That was fun. I love gambling, so I love being
What'd you play?
blackjack. I just love being at the table. Do you want another drink? Yeah, I do want another drink, please. I just love that part of it. I love it, and the weather was nice, and the food was great. It was a great time. Loved it.
Well deserved. He was on Slack from the beach,
I can't help it.
like responding to me. I'm like, can you just go have a vacation, please?
I can't help it.
He can't help it. All right, I listened to a bunch of podcasts recently. Seth Klarman was on with Ted Seides.
I haven't listened yet. Good?
He's probably the opposite investor as you are, like his approach.
He was shorting stocks this year.
No. I don't mean like he's betting against the things that you're betting on. Just
probably
the
never looks at charts.
I know
the
him.
mentality.
I know
Yeah.
him.
He's doing the things that are most off the beaten path. He's not like, what's the best stock in the S&P to buy? He's looking for like a private credit where people think a bank is going out of business, but it's
And
really
also, he's
not.
probably buying business. He doesn't give a shit about sentiment. It's
Yeah.
just different.
Anyway, this is one of I emailed this to Ted. First of all, Seth Klarman doesn't do media. He's putting out the 6th edition of the book, and he got a lot of really great people lined up to write chapters in it, and that's why he's on with Ted. But I told Ted, this is like the perfect way to interview Seth. The way that Ted did it, because Ted really knows everything about this guy. So it was worth listening to. And he owns part of the Red Sox, and I think he's a billionaire. The Acquired podcast did the Nike story. Do you ever listen to that show?
No.
You would love this.
Okay.
It's 4 hours.
Oh, I heard about this.
So I had to drive to Newark Airport.
It's like the business
I
side,
made
right?
Sprinkles
That's
listen
good,
to
that's
this
good.
whole thing.
I heard about this.
It was really
It's really
awesome.
good. Cool. It's good
And
to
then
know.
Ice-T was on Drink Champs. So Drink Champs is like just all legendary rappers, and Ice-T is one of the better life stories. Anyway, those are my 3. Do you have any favorites for us today, JC?
I just wanted, something that I think gets underrated and lost quite a bit is just how good the sushi is in New York. I know Josh doesn't like it. New
No,
York
I
is
do like it.
You don't like it.
I like spicy, crunchy tuna
I don't
rolls.
want to. I can't even look at you. New York City is like real city when it comes to sushi. Like people are like, oh, there's good sushi in Charlotte or in Chicago. No. New York City is like a real city
Say
when
more.
it comes to sushi.
Go off, King. Say more. Why?
69 Leonard. Well, it's New York, so right.
Yeah,
so there's
everything's
that.
better than everywhere in New York. I agree with that.
Well, I don't know about all that, but sushi, like it's on the map globally in terms of there's real Japanese cuisine here.
Give us some more spots. 69 Leonard. What else?
69 Leonard, and the best Plan B in the history of Plan Bs is Blue Ribbon Sushi, and the fact that that's the Plan B and the place is bomb, and you could always get a table
in Fide-Eye.
Sushi and Fidei.
No, there's a Blue Ribbon Sushi in Financial District
Is there
also.
now?
Yeah.
Well, there's the original one next to the Blue Ribbon that we used to go to.
Yes.
With
And
the
there's one
oxtail?
on
Not
58th.
oxtail.
Yeah, they do an oxtail fried rice. Yeah, they do.
No, bone marrow. That's what I was thinking. You put me onto that.
Oh, but that's the original Blue Ribbon.
Okay,
This
okay.
is Blue Ribbon Sushi specifically.
Yeah.
I like Japonica in the Village. Been there since the 80s. How many sushi joints you know been around since the 80s?
Yeah. Okay.
69 lettered for omakase.
Is there a decent sushi in Midtown? I can't find one that I like.
No,
You
right
know,
next door.
Sushi
Koi.
by Bo. Sushi by Bo does a little omakase.
That's too much for me.
Dude, Koi
Just
is
like a
next door.
No, but
No,
Koi is a
That's not
bang
sushi.
out.
Like they might have sushi.
They
but
have sushi, but it's I feel like that place is almost
Dude, stop eating in
disrespectful.
Midtown. Go
It's very
downtown like a
No, but
normal
I
person.
work here is my problem.
Okay, well, go downtown. The food's better.
All right, JC Parets, ladies and gentlemen. Crushing on the show today. Thank you so much. Thanks to Duncan. Duncan, rough week for you?
A little bit.
No John here?
Made it.
Yeah.
All right, you made it, though. You did a great job.
job.
All
Duncan.
killing it.
Killing it. Nicole, Duncan, Rob, thank you guys so much. Thanks for everything. John, we missed you. Sean, great job in the doc. Shout out to all the listeners. Thank you guys so much. Make sure you check out allstarcharts.com for Michael's vacation photos. Where can they go if they want to see? Is it no?
OnlyFans?
Okay. All right. Hey, guys, remember, if you love the show, give us a rating, give us a review, tell your friends. We'll see you again next week. Thanks again.